Good morning, everyone, and welcome to Nadex Morning Analysis. It is Thursday, May 6th. My name is Todd Rich. I am with Nadex. With me from Keep Trading Simple is Brian Caprice. Before Brian and I get into some potential hotspots in the markets today, I do need to share this quick disclaimer that trading involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Okay, with that, the story of the day, one, the initial jobless claims in the US dropped below 500,000. I don't think it's been below 500,000 since the whole pandemic began. So hiring is picking up. Layoffs definitely are slowing down. So we're seeing the U.S. economy heat up a little bit. Also, the Bank of England was talking about a bit about inflation. So today we're going to take a look at gold, and we're going to take a look at the pound. Things that they're actually moving around today. So Brian, let me flip this over to you, and let's get into it.
Yeah, so I mean, we've had some good data with the pound early on. The final services PMI was actually higher than expected, and again, showing kind of an expanding economy. At 7 o'clock this morning and 8 o'clock, if you guys look at your charts, you'll see that there was amazing. I mean, just crazy. Let me go over here real quick. You'll see crazy spike up and down right here. This is when that statement came out, and this was, I mean, talk about volatility. You're talking about 88 pips in less than like 10 minutes. It was, here it is on the pound. You can see very, very large spike up and down. So, again, we've mentioned it in the past, but being able to knowing when there is going to be news is an amazing time to trade, because the things that they say, particularly, again, this monetary policy report. Every country has one. There's actually one later today for Australia. The things that they say, particularly in the environment we're in right now, are major catalysts in the market. So I want to talk about that. Big things that they've talked about inside of this monetary policy statement are also very interesting because it affects the gold market. In a nutshell here, I love it. They say in a nutshell and tell you what it is. Let me see if I can make this a little bit bigger for you guys. There you go, so everybody can read it. COVID weighed on economic activity at the start of the year. No kidding. I think everybody agrees with that one, as well as Brexit. Vaccines are now helping the UK economy recover rapidly. There we go. That's where we've seen a lot of the pound strength coming from. Inflation is below our 2% target, and again, that's what their mandate is. But and this is important, but we expect it to rise to around the target this year. Everybody else is saying, I mean, like the United States is saying, yeah, maybe 2023 will return, but all the data we've seen is significant, much, much higher. The UK is like, hey, we'll be back to normal by the end of this year, like nothing happened. And it says we're going to keep interest rates low to support households and business. So it's very interesting. This is going to be a year for pound trading, because as this gets closer and closer to 2%, they are going to start, and once it is 2%, they're going to keep inflation from getting crazy. This is going to start changing. It's going to bring massive amounts of strength to the pound. All right. So looking at a pound chart, this one is probably the easiest. And again, it's an important level. We had marked it off yesterday, and we were sitting, let's see, let's go back. We were sitting right here yesterday, and we mentioned we're in an area, it's red. We're kind of, we're bearish more than anything else right now because we are in the top section. We did have a parabolic move. And if you guys remember, I threw this arrow and said, hey, listen, our profit targets need to be right here before the start of this move. And you can see, even though it was pushing down and it made it about halfway there, the volatility of that monetary policy statement jacked this up and down very, very fast. For those of you, and again, we try to add education into this on in the mornings. If you were with a binary or a call spread, guess what? No problem, no harm, no foul. You're still in the trade. But had you been in a knockout position here and this had breached the ceiling of the floor, you probably got taken out. So again, here was our target. It came right back down and actually went a little bit lower than what our target was yesterday. Where we are right now, again, we are still leaving that zone. We know right now, because price cleared all the way down to here, we know that there's no buyers sitting in that area. So there's a potential for this to run down to about there. There's a small group of buyers right here, but again, we have this kind of failure to go higher top put in. We also have kind of the lower highs coming in, right? One here, one here, one here, and each time the sellers have been able to kind of stack in. So right now, I would say, with this amount of movement, it was a quick spike down, and then no, everything's great and bite back up again. We are in the third area. I would say, going short today is probably not horrible. Ideally, I mean, I don't have it up in front of me right now, but I mean, it is Thursday. We do have 2 days left. If we can catch some type of whether the week, you could look at the weekly call spreads, the daily call spreads, or you could look at I'm sorry, the weekly binaries, the call spreads, or the knockouts. All of them are possible areas to go to. And again, we're bearish biased. We're up top. We've already seen a clearing of any orders to stop us, and we know that we really don't have anybody coming in at least until pretty much this mark right here. All right, so I'd say it's kind of set up. And again, if we do just happen to go sideways in this area, this is also setting up for a short opportunity for next week. There is obviously pound strength coming in, but again, every time it goes up, it comes back down. It's a natural flow of the market up and down.
Perfect. I dropped this link. I accidentally dropped it in there twice. I want to make sure you got it. This is DailyFX. IG Group owns both Nadex and DailyFX.com. And this is what Brian was actually talking about. And I do like to use this as a teaching opportunity where you've got these economic calendars. And we did know this morning that there was going to be the Bank of England, the Bank of England making their interest rate decision, and it could create possible opportunities in the market, which you see that massive spike. By the way, this is also where we see that the U.S. came out with their initial jobless claims. So it's a great place to go to reference, and you can actually then check out, hey, what's coming up tomorrow? And you could choose whether you want to see high, medium, or low. You could choose which regions you want to see, and some of it may not be that relevant to you. If you're trading the Mexican peso, tomorrow morning might be interesting with the Mexican peso. If you're trading the loonie, the Canadian dollar, they've got their unemployment rates coming out tomorrow morning. So there's quite a bit. Plus, the U.S. we've got our non-farm payrolls. It's the first Friday of the month. So we had unemployment claims today, but tomorrow is the monthly non-farm payrolls and the unemployment rate. So tomorrow morning, definitely going to be some action, and you could see when each one of these reports are coming out and when the markets might actually be moving. Brian, I'm going to flip it back to you to talk about. I think you wanted to.
Yeah, I just wanted to show as well, guys, on DailyFX. If you like alerts and you're doing a lot of things, you can go in this bottom left-hand corner over here and click this, and there'll be an alert function where calendar events as well as live webinars will pop up over here, and you can receive notifications for it. So, you can actually download, if there's a specific news event that you like, you can actually download any of these events and add it to your calendar so you can get the alert there as well. So again, using technology. Like I said, if we have the technology, we should be using it, right?
What is this technology that you refer to?
I mean, why use a car when I got a horse outside? Everybody. I don't have a horse outside, guys. Don't worry.
Yeah, you do. And my car has like 20 horses in it, apparently.
Yeah.
It's the horsepower.
So gold. Yeah, I want to bring up gold because again, inflation is going to be a hot topic. Again, we saw a huge drop in price. Yesterday? We were up at that level 1795, and we talked about a parabolic retracement move, and it ended up coming all the way back up. So where we are right now at the 1795, as we see, I mean, from the monetary policy report, we know that we're definitely not at our target. So they're not seeing runaway inflation. Where gold is right now, it's in an area, it's in the top third. It's been in an area where we've seen sellers. I mean, if we want to mark off the entire kind of group, right there would be the entire area where we have selling coming in. So we're in an area right now. In the overnight, we've seen it kind of run up a little bit, and then all of a sudden we got the pound news that it's not the greatest. So, it's kind of one of these things. Can we take small risk on it? Yeah, probably. Is it an area where we are thinking more, bearish biased? Yeah, probably. Is it the freshest of levels? No. And again, the one thing about that not being at the freshest level, maybe because it's, 854 right now, maybe we don't look for a short right now, even though, again, it's in an area where we're seeing that. Maybe you say, hey, listen, this is broken through higher. I'm going to wait for this one to finally go long. And maybe your play of the day is this. If you don't think that this is going to go down, right? Maybe this is the play that you're looking for. Whoops. Let me delete that one. Long position there, here, and 3-1. Maybe you're saying that gold's going to hit 1805 today. And again, it has hit the level multiple times. We typically don't like to go long up here, but right now we're seeing it in an area. So this is why trading is fun, because some people want to take an early morning short on this one and play this back down. Some people will say, hey, listen, they say they're going to keep it low. They're going to increase inflation. If there's going to be inflation, that means it's good for gold, right? And then what you can do is you can take a Harry Potter confirmation. So it's kind of like, are you a risk averse person? Then we wait for the confirmation high. If you're an aggressive trader, then maybe you go to take this short. Or you say, hey, listen, I know it's going to go one of those two directions, and you play one of the strategies that says, hey, listen, it's going to burst out the top or just go crash back down again. So entirely up to you, but we just finished the parabolic retracement move from yesterday.
Yeah. All right. I do want to bring up, this level. I just brought up the chart for gold, having a little bit of a crazy morning here for me. But this is that 1795 level up top. And, all I did was extend it through. And this level, I don't think we know. I mean, we can see this level was hit once, twice, 3 times. The 4th time, it couldn't get through. The 5th time, it couldn't get through. This is that parabolic retracement, Brian said. This is the 6th time it's hitting it. Usually the rules are 1, 2, 3, and 4, it goes through. But again, gold seeing some serious resistance right below 1800, like Gandalf at the bridge. You shall not pass. I don't even think he says that. I think that's just in the movie. I think it's you will not pass. But just for emphasis, it's the sellers are showing up there, and again, don't know if this is going to be one of those ones where it finally gets through, but a great way to potentially play that. You've got some binary options in here if it were to start poking through. There's
and 1800 is going to be a big psychological level. Remember, the second we break 1800 on that one, the news is going to be like, oh, we just break 1800 in gold. It's time, right?
Right.
So I mean, there's going to be initial kind of retail response to that one. And do me a favor, switch back real quick. I just want.
Oh yeah, of course.
So guys, when you go back and look to see where price was previously, because a lot of what I do is actually looking left, there's a level right here, which is a pretty decent level. I did it in purple, so it'd be easy to see. This is a 2-hour chart. It's not a typical one, but I like the top of this one. And I just want to show you guys, if I go all the way across, right? Whoops, not that. Now it's going crazy on me again. If we go all the way across, you guys can see where that's hitting. That little 3-to-1 risk to reward ratio I just put up, guess where it just happens to be? It's running into that same level where we know sellers are coming in. And again, the 1800 mark is here. And again, if they break 1800, that's where people are like, oh, we're going long again. It's time. We broke an 1800. And that's why we've had such a hard time, because it is a psychological level. So understand, if we break through that 1797.70 and we start to peak up, and as soon as we hit 1800, big level, double zero at the end, again, it's going to help draw that forward, and people are going to start going long because we've broken 1800 again, which will also help suck this higher. And we only need to go to 1805.
Yep.
So interesting setup.
So with that, we spoke about the pound. We spoke about gold. If you've got any questions for Nadex, please email us, customerservice@nadex.com. Got any questions for Brian? You can hit him up at support@keeptradingsimple.com. Brian and I will be back tomorrow morning. Remember, take a look at that calendar on DailyFX.com. There are going to be quite a few reports coming out tomorrow morning. It should be a busy morning. We will catch you then. Good luck in the markets, everyone. Thanks.